Hi, my name is Jerry Holland. I'm the president and CEO of NewPoint Lending, and today we want to talk about mistakes that first-time homebuyers make. So if you fall into the category as a first-time homebuyer, listen up. This is for you. So one of the bigger mistakes that I see first-time homebuyers make is going out shopping before they are pre-qualified or pre-approved for a home loan. It's like if you go buy a car, are you going to go buy a car before you know how much of a car you can afford to pay? You won't do it. So why are you going out looking at homes before you know how much of a home you can purchase? It doesn't make sense in the long run. Now, let's talk about your pre-qualification and a pre-approval and what the differences are between the two, because there's so much misclarity in our industry about this that you need to be aware of it. A lot of the time we have call centers, super easy to call into, and they will give you a pre-qualification on the spot. Quite frankly, all that is, hey, how much income do you make? How long have you been at your job? It's all very verbal, right? You don't want a verbal pre-qualification when you're looking for a home, because that does not mean anything to anyone. What you need is a pre-approval. Pre-approval means that we're going to talk to you first, and then we're going to ask you for your documents. I want to see your bank statements, your pay stubs. I want to pull your credit reports. I want to see all this information that you have so that we can take it and verify it and give you an actual number that you should be going out shopping for. Now let's talk about another big mistake that homeowners do. Going through the pre-qualification, pre-approval process, we are going to ask you for a lot of information. And homeowners like to make this mistake where they hide information from us. Now, do they do it intentionally or they do it mistakenly? It's always up in the air. But rest assured, once we ask you for information, we ask you to be upfront and honest with us, because we will verify the information you give us. I recently had a homeowner that fully intended to get a job paying $21 an hour. That job never materialized. So once we qualify them and we receive the pay stubs, I see that they're making $18 an hour. And I have to ask them, hey, this is showing 18. You said 21 when I pre-qualified you. What's going on? After a little bit of digging, we understand that they went from a $240,000 pre-qualification purchase price to actual pre-approval amount of $200,000 because they are making $3 an hour less. So keep in mind, as you're moving forward, just be honest with us. We're here to help you. And if something does not make sense, if you had a bankruptcy in the past, we're going to ask more questions. Was it Chapter 7 or Chapter 13? Because these clarifying questions will help us determine how to proceed in the future so that you can get into your home. Another mistake that home buyers make when they're looking for a home is they want to better their situation, which is great. It's amazing to better your situation, right? But sometimes they want to change jobs to better situations, and there is nothing wrong with that. You just need to talk to us first, because once you talk to us and you change your job, we're going to tell you what the limitations are. Now, here's a story of one home buyer that I had. He decided to change his job in the middle of the process, but he didn't tell us until he was already under contract for a home, and we're working towards getting him verified, right? He went from a salary position, W-2 salary, where he had flexible income, but it didn't matter, or flexible hours, but it didn't matter. And he decided that instead of working at the office, he wanted to work at home. So his company's policy was, in order to work remotely at home, he had to switch his position from salary to hourly, because with FHA, the type of loan that he was qualifying for, he now switched from a salary position to a variable hourly position. That means we have to look at his income for a 12-month period before we can use it to qualify him for a home loan. That simple job change, even though he was making the same money, it just provided flexibility in his life, meant that he had to continue renting for 12 months. So keep this in mind before you make any major changes. Come talk to us, and we'll kind of walk you through it and tell you if now's the time or if you need to think about a different time. So first-time home buyers, one of the misconceptions that we have with down payments is you have to come in with 20% down. It's not true. We have programs out there that'll let you come in with zero money down if you're buying in the country area or if you're a veteran. There are other programs that will allow you to come in with 3% down if you're a first-time home buyer. Now keep in mind that the more money you put down, the lower principal amount, so the lower monthly payments. But it is not at all a requirement. And a lot of home buyers do not put down 20%. So do not let that stop you from moving forward. Now, if you choose to put down 20% because you don't want to pay your mortgage insurance, there's other ways around that as well. As a first-time home buyer, you could put down 10% and then do a second lien for the other 10%. This is called a 10-10-80. So with a 10-10-80, you can actually have zero mortgage insurance. But here's the dirty secret, guys. Mortgage insurance is not that expensive and it's not that bad. It's put there to protect you and protect the lender in case of a default. So the next mistake that home buyers do that I would like to talk about is talking to our families and friends. Our families and friends, we love them to pieces. They are fabulous, they're wonderful, and they can tell you the best salad recipe, right? Or spaghetti, but where they consistently mess up and give bad information, not meaning to, is for the lending process or when you're getting home inspections or buying a home. We have seen this time and time again where we have had family members tell you to wait and to buy a home now because interest rates are coming down. We have a housing bubble. And like right now, the time is August 2023. And lots of speculation, there is a housing bubble amidst our families. But what they are not watching is the supply and demand. They are not watching the jobs reports. They are not watching the thing that experts like myself and your real estate agents are watching. Because if you come ask us, we see so much equity in our homes. We see that the home values have appreciated over 5% in 2023, which has some of the highest interest rates of all times. And so with all this appreciation, all this value, if you're listening to your family members instead of listening to your professionals, then you could be making a mistake and leaving money on the table that you should be taking with you. So the next mistake that we see first-time home buyers make are using the seller's real estate agent. Now think of your sellers. Your sellers could be the people actually selling their house, or it could be someone building a house. So builders are sellers also. So let's keep in mind that when you're walking into the builder's model home, you will be approached by their sales agents. Once you're approached by them, you need to let them know you already have a real estate agent that you're working with and you're under contract to work with them, right? Even if you aren't, tell them you are, because this will protect you in the long run. The next thing you need to do is talk to myself or talk to anyone that you need to find a real estate agent to represent you. This is very important. If you're working with sellers or builders and they have an agent that you're using, well, this agent is doing what's called dual agency. They are going to represent the sellers and they may be representing you as well, but how good a job will they do? That's always the question. So find yourself an agent because the sellers will pay for you to have it. Now, finally, the last thing that I want to talk about that we see homeowners, first-time home buyers do on a consistently basis is waiving your mortgage contingencies. These are your backout clauses, right? Now, some programs will let you do this. Other programs will not let you do this. So keep in mind, but you may be asked to waive your inspection, waive your appraisal, waive your due diligence. These are all key components that you want to keep because as you're moving forward with the transaction within the first couple of days, you're going to do an inspection. And I have about a 20% fallout that people do find something wrong with the house and pull back or start renegotiating the price of the house after they do the inspection. Or they may get a new roof put on, right? So keep this in mind. These backout clauses or contingencies are there for you to protect your investment before you move too far into the process. If anyone's telling you to waive it, that could be a red flag that you need your own real estate agent to work on your behalf. Now, if you have any questions or if you're ready to get started, reach out to us at newpointlending.com, either myself or someone on my team, we'll be glad to help.